My name is Natasha Cazenave. I'm the Executive Director here at ESMA, and I am here with Verena Ross, our chair, who will be presenting to you the main elements of our paper. After the presentation, we'll hear from Christine Lagarde, who has kindly shared her thoughts through a short video before we open the floor for you to ask questions. So let me start. In April this year, the European Council has set the scene quite clearly. Let me quote them. In the face of a new geopolitical reality and increasingly complex challenges, the European Union is committed to acting decisively to ensure its long-term competitiveness, prosperity, and leadership on the global stage and to strengthen its strategic autonomy. It's against this background that the European Council has identified as a priority to, let me quote again, advance work to create truly integrated European capital markets accessible to all citizens and businesses across the Union to the benefit of all member states. A number of key stakeholders have also called for concrete actions to mobilize private capital and further enhancement of European capital markets as a priority. That is the case for the European Central Bank Governing Council, Dutch authorities, the French authorities, and importantly, Enrico Letta's inspiring much more than a single market report. So the sense of urgency is clear. Today, we will be sharing with you the perspective of the European securities regulators, those in charge of the regulation and supervision of our markets. Let me immediately turn to Verena to present to you the specific proposals identified and the key changes that we have deemed necessary to make the much needed decisive progress to more effective capital markets. Verena, over to you.
Thank you very much, Natasha. Ladies and gentlemen, I'm so glad to see so many of you joining us online today, and I'm very happy to be with you for the launch of ESMA's position paper on building more effective and attractive capital markets in the EU. Gradual progress has been made to improve the efficiency, scale, and resilience of EU capital markets in recent years. On the back of 2 Commission CMU action plans, a wide range of measures has been introduced, even if it will still take a bit of time for us to truly experience the impact of the latest actions. Yet, overall, EU capital markets remain underdeveloped and fragmented in comparison to global peers. In the face of a changing world and new challenges, renewed momentum and greater commitment is needed to boost the role of capital markets in supporting growth, innovation, and competitiveness in the European economy. Neither public budgets nor banks will be able to support this large-scale investment effort alone. Private and public market-based financing must play a more fundamental role. This underlines the critical importance and urgency of developing a better European capital market ecosystem. Fundamentally, this is about providing better access to financing for European companies. Companies, both big and small, incumbent and new entrants, traditional businesses, and innovative technologies. Most importantly, it applies to all 4 corners of the European Union, allowing for finance to flow seamlessly to where it is most needed. EU capital markets should not be hindered by barriers preventing that capital flow within the EU. However, at the same time, it is also about, very importantly, the long-term savings of EU citizens. Investors must be reassured that they have the opportunity to participate in capital markets in straightforward ways with adequate protections, that they can benefit from the wealth created through capital markets to serve their long-term needs. Building a stronger equity culture in the EU not only opens up new opportunities for citizens to grow their savings in different ways, but it also contributes to a more diversified, resilient, and stable financial system. Like many, ESMA recognizes the need for a more concerted effort to deepen and integrate European capital markets. In September last year, ESMA established a board-level task force composed of a small, diverse group of ESMA board members to look into the state of play of EU capital markets and to identify ways to improve their effectiveness and attractiveness. This task force has analyzed the current functioning of capital markets in Europe, taking into account regulatory market and also international developments. Building on the work of the task force, the ESMA Board of Supervisors further discussed and refined the analysis and ideas, and approved last week ESMA's position that expresses the view of the European securities markets regulators and supervisors. Today, therefore, I'm very pleased to show you what ESMA puts forward in terms of recommendations for building more effective and attractive capital markets in the EU. Through leveraging on our expertise and extensive discussions also with stakeholders, we've built a comprehensive set of proposals directed to capital market supervisors, so ourselves, but also importantly to EU member states, to the European Commission, to co-legislators, and also to the financial industry. Let me go through these proposals in a bit more detail. And we are looking at this really through 3 dimensions. Let me talk through each of those dimensions briefly and give you a few examples. Starting firstly with the perspective of EU citizens. Currently, EU citizens tend to rely mostly on bank deposits for safeguarding their money, which may prove in certain circumstances suboptimal for growing their hard-earned savings. We need to reassure people that capital markets can serve their investment needs and allow them to benefit from wealth created through these markets. To do this, we need to ensure that simple and cost-efficient investment options are available to empower citizens to invest their savings in a way that serves their long-term needs. Key recommendations from the ESMA paper in this area include, amongst others, the development of basic long-term investment products, as well as building pension systems that are suitably incentivized and contribute to the development of capital markets. Here, the benefits are twofold. Increasing such investment in the EU can not only provide more promising long-term returns for citizens, but also deepen funding pools available to the EU economy. There are several examples at member state level where investment saving products and pension funds have been suitably incorporated into the national system. The powers of such measures cannot be emphasized enough, and clearly we need to benefit from them at a European level. This should be complemented by efforts to improve financial education, as you can see here as one of the recommendations on the slide. Financial education is a matter of public policy that needs to be tackled primarily by governments, with the aim to improve the financial knowledge of citizens across their whole lifetime, young and old. The EU and ESMA as well will play their role in coordinating and boosting initiatives also at EU level. Let me move to the next perspective, the perspective of EU companies. Diverse and sustainable funding options are critical for fueling growth and innovation in the EU, particularly in critical economic sectors such as technology and energy, and very particularly also for small and medium-sized enterprises, SMEs. In turn, these businesses will provide investment opportunities for citizens and investors. In recent times, we've seen some negative trends in attracting EU companies to list or stay listed on EU public markets. It is therefore important to stimulate more public equity funding to complement private funding opportunities and debt financing. Key recommendations in this area include fostering pan-European markets by addressing barriers to integration, particularly for market infrastructures that are covered here under a couple of the recommendations: fostering pan-European markets, but also creating conditions for pan-European partnerships. Building more integrated capital markets and reducing the fragmentation between more developed and less developed markets in the EU will allow capital to flow to where it is most needed. Businesses and citizens from all corners of the EU should be able to access our markets equally. Developing a conducive ecosystem for public companies, as indicated in the recommendation about ensuring a balanced and conducive ecosystem for listed public companies, is also important in the context of the attractiveness of our public listed markets. EU companies should see the opportunities to go public in the EU and not necessarily need to turn to overseas markets. We therefore have to make sure that the balance of regulatory requirements is proportionate at all times. We also need to look at funding sources for those companies that are not yet ready to go public, and also here ensure a growth in the diverse funding possibilities for them. Let me now move on to the third dimension. Here, the regulatory and supervisory framework is shown as an essential foundation for effective and attractive capital markets. It ensures that investors are treated fairly, it promotes transparency and market integrity, and it aims to ensure that the capital markets operate in an efficient and stable manner. ESMA and national authorities are particularly familiar with the rulemaking processes and the day-to-day supervisory challenges that we currently face in the EU. We are therefore well placed to advise on the framework for regulating and supervising EU capital markets and how it must be modernized to make it more agile to respond to the evolving needs here in the European Union, but also at the international level. Key recommendations to address this include the reform of the EU's regulatory framework to introduce more agility, responsiveness, consistency, and efficiency, as proposed here under the first and second of the recommendation on this slide. This is necessary in order to reflect the modern realities of how capital markets function. It would also allow us, as EU regulators, to act in line with our global peers, for example, by having effective forbearance powers. At the same time, supervisory consistency amongst EU supervisors should be prioritized with enhanced convergence activity. At the same time, we should evaluate the case for further centralization of supervision at EU level. Recommendations on improving supervisory consistency and evaluating direct supervision at EU level here on the slide talk to this. Focusing on how better supervisory convergence actions can work for certain parts of our capital markets, while more EU-level supervision should be considered for some relevant areas, such as large pan-European market infrastructures. ESMA will continue to engage and collaborate with all stakeholders to further examine the 20 recommendations outlined in this paper and work towards their implementation. This will be particularly important when engaging with the new European Commission and the European Parliament on the priorities for the next 5 years. In addition, as the Council and the Eurogroup also move forward on the various actions based on the mandate that they were given by EU leaders, we stand ready to bring further insight from the EU securities regulators' perspective to help them in their work. Our paper will now be online on the ESMA website. We have also prepared a fact sheet which sums up the main ideas. And I'm looking forward to taking any questions you might have now today in the next few minutes. But first, before doing that, it gives me great pleasure to introduce the President of the European Central Bank, Madame Christine Lagarde, who sent us today a video contribution to share her views on the need for effective and attractive capital markets in the EU.
It's a pleasure to be with you via this video message to mark the release of the ESMA's position paper on building a more effective and attractive capital market union. ESMA's deep expertise and extensive experience in European capital markets lend significant weight to its contribution, particularly at this pivotal moment for Europe. We are confronted with new challenges stemming from geopolitical fragmentation, slowing productivity growth, and mounting climate change. Meeting these challenges will require unprecedented investments and create financing needs that far exceed the capacity of our fragmented markets. In many respects, our circumstances today echo those of the 19th century, when America's railroad revolution spurred the development of a national capital market to meet transformative economic needs. Today, we too have the opportunity to anchor our capital market union in a unifying project encompassing green, digital, and geopolitical transitions. This is why I argued for a Kantian shift in our CMU strategy. We must move from a bottom-up to a bold top-down approach, which entails two crucial elements. First, shifting from fragmented legislation to a single rule book, a unified set of directly applicable rules for capital markets that facilitates cross-border trading and competition. Second, enforcing this rule book through a supervisor with a broad mandate, such as by extending ESMA's powers to directly supervise systemic firms. This would both promote the EU-level playing field that supports financial integration and avoid the potential risks going unnoticed as capital markets grow and develop across borders. Implementing this approach would help to break down the walls separating national markets and unlock substantial benefits in terms of funding, creating a larger pool of investors, issuers and financial instruments, facilitating funding access for innovative firms, fostering competition between market infrastructure providers, resulting in larger cross-border infrastructures, providing more opportunities for household savings in capital markets. These opportunities, if seized, would empower innovative European firms, boost diffusion of technology, and enhance Europe's competitiveness and strategic autonomy in a changing world. We need all parties to rally around building a genuine capital market union. Our prosperity, our future, depend on it. So let us embrace this historic opportunity together. Thank you.
Let me thank Madame Lagarde for her contribution. Thank you, Verena, for the presentation. We will now open the floor to questions. May I ask participants in the audience who would like to take the floor to please raise your hand or use the Q&A tool. And I will start with Andreas Körner, who has asked to speak up. Please, Andreas, the floor is yours.
Thank you. I have questions about three proposals. First, I would like to understand better why you see a need to create a new EU label for basic and simple investment products, since, I mean, there are many simple products out there like ETFs. Do you have the impression that banks and asset managers sell retail investors too many complex and expensive products, and do you want to create pressure that they sell more simpler and cheaper products in the future? And moreover, you promote a simplified and streamlined advice segment. Is that an acknowledgement that many of the current rules are excessive and hinder more investments by retail investors? And you also promote the idea that ESMA should directly supervise large pan-European market infrastructures. Does that include stock exchanges or only clearinghouses? And do you think that the liability to deal or bail out a clearinghouse in case of crisis should be organized on a European level as well when you supervise these institutions on a European level? Thank you.
Thank you very much, Andreas, and thank you for your very pertinent questions on some of the recommendations. To take them point by point, certainly from the ESMA perspective, we believe it is worth exploring whether a voluntary basic product label could actually provide an opportunity to ensure that it is clear to investors where a product has a certain characteristics of being simple, being cost effective, being able to be sold, therefore also in a way that maybe doesn't require as much of the advice, as much of the host of information that normally is surrounding selling of products. And we feel that that would give also trust and confidence to investors that don't not have the time or the willingness to necessarily engage so much in the process of investing and choosing specific products, that they can find a product that suits them for their long-term saving needs and that has certain basic characteristics which hopefully will allow them to benefit from the capital market without necessarily becoming a capital markets expert. And linked to that is obviously also then a simpler advice regime that allows also for a quicker and more efficient process of getting engaged in capital markets for investors while still being protected appropriately. On your last point on investigating, considering, evaluating where more direct EU level supervision could be appropriate, indeed, we emphasize in the paper that there are various cases that could be investigated further, and one of those is market infrastructures, and that deliberately has been phrased quite high level, because I think we would need to look closely at the specific cases around, for example, CCPs, CSDs, or trading venues. But we have also put there as an example crypto asset service providers. All of these entities are clearly providing and are planning to provide in their majority cross-European services on which people rely all across the EU. And therefore, it's important that in those type of cases where it's a genuinely cross-border infrastructure accessibly used by investors and companies all over the EU, that the supervision is sufficiently coordinated at a European level.
And do you think that the liability to deal with a failing clearinghouse should be organized on a European level then as well, or could that stay on a national level?
I think that is one of the areas you would have to investigate further as you consider moving to direct supervision. That has clearly been one of the debates in the recent EMIR review. At the same time, I believe that it's also clear that if you come to a recovery and resolution of a European level CCP that is serving various markets, you probably need to think more broadly about resolution and recovery also in the context of potential key clearing members and not just of the CCP itself.
Thank you.
Thank you.
I think Jack Schickler was the next person.
Thank you. Thank you, Jack Schickler from Euronews. You say you want direct supervision of crypto asset providers and cross-border infrastructure do you have any sense that I mean, those proposals have been proposed previously and rejected by member states? Do you have any sense that this time it might succeed?
You're right that some of the areas have been recently agreed as part of European legislative files. At the same time, I think what we are putting forward here is the European securities markets regulators and supervisors perspective. And certainly in our ESMA board, we believe these were examples where at least further consideration would be necessary and would be justified. And therefore, that is the recommendation that we are putting forward. I would hope that also the co-legislators would be willing to look at this again in the light of the general willingness and push to move forward on European capital markets. And at least personally, I believe consideration and evaluation of where most efficiently supervisory responsibility should lie should be part of that.
Next is Raymond Franken, please.
Hello? Raymond?
We'll move to Guillaume Prache until we can fix the mic for Raymond. Sorry about that.
Good morning. Thank you very much to ESMA to contribute to this essential debate. You have, in fact, pointed out to the fact that the main source of funding for the economy is clearly the savings of households and not the public budgets or the banks. And many policymakers also are more and more aware and vocal about the fact that, for example, US equities, US investment products proposed by US providers are very often more attractive than European equities or package investment products manufactured by Europe. And in fact, what I like very much in your title of your paper is the term attractive. If we want citizens to contribute, the products must be attractive. And my question is, how do you think the ESMA proposals, which are very interesting, and we will need to, of course, dig further into the document itself and to better understand. But how do you think they will really make EU retail investment, and especially EU equity and EU retail investments into capital markets, more attractive, knowing that US equities have vastly overperformed European ones, and that also the total charges of US manufactured package products are much lower. And I was a bit, I had a question mark that there was no mention on the slide on value for money, on more independent advice, and on the comparable, intelligible key information on the actual net performance of products, of their benchmarks, and on total charges. I have many more questions, but I think this will be enough for today.
Thank you, Guillaume. And that's already a whole set of questions. No, I think the proposals here on the table are indeed trying to drive to making the investment opportunities for EU investors more attractive in comparison also with what is available globally. That doesn't mean, to my mind, that we should become a kind of closed European shop. We need to continue to be part of the global economy, and investors need to have the opportunity to invest where they believe they want to put their money. But at the same time, we need to make sure that the European market proposition is becoming more attractive in the global comparison. And as part of that, we have put forward the recommendations around basic and simple investment products suitable for retail investors. We've put forward the recommendation on looking at creating more simple advice category. That is also partly reflecting on the need, together with the recommendation on supporting digital solutions for retail investors, that we need to ensure that investors have the right information that allows them to make relevant investment choices, and that they are properly supported and aided in making those investment choices. Part of that is by the right information being available in a easily understandable and comparable format, so that investors can actually see and compare different products and therefore decide what suits them best to support their long-term needs. Thank you.
Thank you.
Can I just check whether Raymond Franken is now connected with the mic? If not, I will go to Rosina Kamerling. Josina?
Yes, hello. Sorry, it takes a long time to unblock. Thank you very much, Verena and Natasha, for this presentation. And thank you for being actually bold at ESMA. What I liked very much, and I want to take you to the slide on the regulatory agility and supervisory consistency. Because indeed, of course, you know, one of the things that has been hampering development of CMU is that there seem to be two speeds, one at the national level, which is disregarding that move towards a really truly capital markets union and keeps national prerogatives and national borders, and the other one at the EU level. I like the bold voice that is being used increasingly in reports for the next 5-year legislative period. I want to ask you, one of the problems, of course, also is on what to legislate at which level, level 1, level 2, and level 3. What is the ESMA view on that? Thank you.
Thank you very much, Rosina. So indeed, I think one of the key points that we wanted to emphasize was that this is about developing capital markets, both at the EU level and at the national level, but in a way that actually ultimately serves the wider European need and allows capital to flow freely, and the ability for investors to and companies from benefit from the scale and the openness of a truly European capital market. At the same time, you need to continue to also promote capital markets and the engagement of investors and companies in public markets at the national level, but with a clear openness to making sure that we have European level liquidity, that we have pan-European infrastructure, that we have pan-European ability to bring these markets together, and therefore also allow small national markets to scale up and for their investors and companies to benefit from the broader European possibilities. And as part of that, as you rightly say, we also talk about the recommendation on modernizing the EU's regulatory framework. And one of the specific points there is about encouraging co-legislators to take a more principles-based approach, whereby the EU framework legislation would focus more on key strategic policy choices that should clearly be left to the co-legislators, but that some of the more detailed technical rules could be delegated to ESMA, and with that also allow for a more agile regulatory system to support the European markets, to allow the European markets to adjust to new market developments and to react to global or regional developments where we need to quickly adjust the regulatory framework. On top of that, we also make a specific point on the need to have more regulations rather than directives to ensure that we have genuinely common EU rules, as also Christine Lagarde said, ultimately a genuine single rulebook is still a key importance to then ensure also convergence and common approaches at the supervisory and implementation level. Thank you very much. Let me go next, and we already saw her briefly, Adina, who also had a question. Adina Gurel. Ah, there you are. Sorry, Adina, we can't hear you, although you seem to be unmuted from here. Okay, we'll give you a minute. Let me try also again, Raymond, whether he is now able to open his microphone. Okay. Can we try Adina? Does that work now? No. A few technical issues this morning. Okay, let's go to Stephen Slater, who I think has also raised his hand. And I see he's already coming up. Very good.
Yeah, good morning. I wonder if 20 recommendations is too many and there's a risk that they aren't prioritised. So are there 2 or 3 that you would like to see get more urgency and more priority out of your pack of 20? Thanks.
Thank you, Stephen. And indeed, we were juggling how many recommendations we would make. On the one hand, we wanted to really take a holistic approach. And I think that is very important that you actually look at this in a very holistic way, because just making 1 or 2 changes, even though it might sound easier, might not actually get you to what you want in terms of overall strengthening the attractiveness and effectiveness of European capital markets. So indeed, we have quite a few recommendations along these 3 different dimensions as I outlined them. I think for me, while it is important to take a holistic approach, the novelty in a way of looking at it in that way is that the priority of recommendation really lies sometimes in the base substance of how do you actually create some of the initial conditions of ensuring that we have, for example, as I mentioned earlier, the pension systems and investment tools that allow to build significant investment capital that can invest in European companies and their growth and innovation. So that is definitely one area where I would say there's a real urgency and priority to try to create that investment capital that allows the European capital markets to grow. On top of that, I think it is important, as we already discussed, that the right investment opportunities are there for investors to make sure that they can take the right choices and engage in capital market development going forward. So those I would call as the core areas and priorities we see from our perspective, but at the same time, being able to deal with some of the recommendations that are maybe a bit easier, a bit more quick, a bit more of the low-hanging fruit to try to already progress would be also a big advantage. And ultimately, we need to move, as I expressed, both at the European and at the national level to really make this a reality. Thank you.
Okay, thanks.
Let me then move to Anna.
Can you hear me okay?
Yes, we can hear you.
Great. My name's Anna Reitman. I write for Canadian News and Opinion, and so we do focus on securities lending, repo, and collateral markets. And I guess I just ask, how do you see securities financing markets specifically playing a role within these recommendations, and what do you think might need to change to do so?
So I think one of the ways in which we have looked at it is really trying to look across the whole of the different types of markets and activities that can really contribute to ultimately creating more effective European capital markets. And securities financing is one part of that. At the same time, it is part of the broader picture of how can we bring investors and companies fund together and create the right funding environment that on the one hand allows investors to benefit from engaging in capital markets, obviously most of the time not in securities financing transactions themselves, but then also create the professional investors that really are able to make the liquidity happen in the market. And for that, I think companies and financial services firms in particular have a big role to play through whatever part of the financing market. But I think the focus was very much on how can we raise financing first and foremost for the real economy. And that is about equity, debt, but also about some of the alternative funding sources through private equity, venture capital, crowdfunding, whatever it is that supports companies in their growth path from being a small, innovative company to ultimately being a success at a European scale. Let me now turn to Rachel Wolcott.
Good morning. Can you hear me?
Yes, we can hear you fine.
Okay, perfect. Good morning. Thank you for taking my question. I had a question about the move to a kind of principles-based approach to rulemaking, and I wanted to hear a little more about how you see this working with this single rule book. You know, it seems like a pretty big kind of philosophical change in approach. And I was wondering if you could talk a little about what financial services firms can expect from ESMA going forward. When might we see some of these, this change in philosophy and rulemaking coming in?
Thank you, Rachel. To my mind, in a way, the idea of having a more principles-based regulatory approach at the primary legislation level at level 1 is not necessarily new, because even in the de Larosière report that created the European supervisory authorities, there was already that idea that you would set the core principles, the key regulatory framework, and the key political choices at level 1, but that then most of the more detailed technical rulemaking should be done at level 2, and with that be more agile and flexible to adapt to new developments in the market and in the financial markets industry. So this is not as such new. It is obviously quite a fundamental point, which I think co-legislators and the Commission need to think about very carefully how they want to take this forward. To our mind, it would really contribute to having not only the ability to holistically look at legislation in the financial services area, but also to look specifically where more detailed rulemaking can be more easily adjusted and made more agile at how you best achieve that. Part of that is also the engagement in bringing forward effective forbearance powers for the regulators and supervisors to allow them also to react where there are sudden changes in market developments or gaps in the implementation framework for specific regulation. So I think all of this sits together as a significant view from us as European securities and markets regulators and supervisors, that we need to look also at the overall regulatory framework. How quickly that will come about, I think, depends very much on the appetite, and it will probably of the co-legislators and the Commission going forward. Thank you.
Thank you.
Right. I think I've just seen Raymond, who was not able to connect, has sent through a couple of questions. The first one is on how does ESMA plan to address the inconsistency in tax incentives for retail investors? That is exactly the area where we call on national governments, national finance ministers to have a look at the importance of re-evaluating the tax incentives around retail investors and the investment in financial and capital markets products. And there, I think it's really beneficial that also at the council level, there are discussions on how that could be done. It is something that needs to be done at national level, obviously, but there can be coordination and common sharing of of lessons learned and experiences that can be really beneficial. And the second question, how to see how regulatory consistency could develop over the coming years, and whether there needs to be more involvement of ESMA in that. So I think here regulatory consistency is particularly important where you have the regulation, supervision, authorization, and enforcement being conducted at national level. That is likely to be the case for the majority of financial services firms in the foreseeable future, even if we need to evaluate direct supervision at EU level for certain sectors, as I said earlier. I think that means that we as ESMA, together with the national authorities, need to continue to work very proactively on driving forward further convergence and consistency in how supervision is actually happening on the ground. And we put forward in our paper also a few areas where we think it could be particularly improved. That includes, for example, facilitating more cooperation and joint supervisory work amongst national competent authorities, particularly when it comes to large cross-border firms, for example, in the form of mandatory supervisory colleges or coordinated supervisory teams. That might also involve actually bringing some of the data collection and processing work together at European level to create for more efficient ability to collect data, to reduce regulatory burdens, and ultimately provide the right information to supervisors on the ground at national level to be able to take supervisory action. And all of that ultimately will help to increase efficiencies and integration as well as consistency of supervision on the ground. Right, I think we are coming to the end. Can I just take one final question, which would be, is there a final question we want to take? So we have one question from Rohan Kapoor that came through on the chat. Could you please elaborate on ESMA's position on promoting EU capital markets as a hub for green finance? Very good question. I didn't specifically pinpoint that recommendation yet, but to our mind, the EU has been at the forefront of developing the regulatory framework around sustainable finance, because we believe genuinely that the sustainable transition is a key priority for Europe. Politically, that has been agreed with the Green Deal in the last Commission and is clearly going to be taken forward. And therefore, we also believe that as securities regulators and supervisors, that there's a real advantage if we can also ensure that the European capital markets ultimately serve that transition, that sustainability transition. And there, I believe Europe also has a competitive advantage maybe to push the green finance agenda and be able to have markets that work effectively and efficiently, particularly also in that context, whether that is about companies that are engaged in that transition or whether it's about investors who want to support more sustainable growth in the future through their investment. Thank you very much.
Thank you, everyone, and apologies to have to cut, but we've reached already the end, and I wanted really on behalf of all of ESMA and of course of our chair, we would like to thank you for joining us today. Thank you for the lively engagement. There was a lot of interest and we were not able to address all questions, but of course we remain available to have discussions and definitely look forward to further engagement in other fora. This is just the beginning of our journey. We hope you will find the paper interesting. As Verena was saying, the paper is now online. And also just wanted to emphasize again that we believe this is a contribution to the broader debate, a special voice we wanted to bring to the table from the European supervisors and regulators. And again, looking forward to further conversations. Thank you very much to all of you for today. And we look forward to discussing with you again in the near future. Have a very nice rest of the day.